Hello, this is Bob Haberkorn from RGO Futures, a StoneX company, here to talk to you about silver, gold, and a little bit about copper too. There's a lot going on since I did the video last week where I talked about how bullish this scenario looks right now for gold and silver, and nothing's changed. Nothing has changed other than the fact that it's gotten more bullish right now. I think I touched on the fact that the LBMA out of London was running short on physical, was what the word on the street is, and that definitely was true. There are cargo planes flying over right now trying to get silver into the LBMA. And the reason that is they borrow against physical silver to short or to trade the futures on the futures contracts. Also to hold on to the ETFs that are out there right now. They require physical silver. And the demand right now is unprecedented. Supplies are very low. I don't know the exact numbers, but the lease rate that they borrow from the others' physical silver, they're paying upwards of 30, 40%. I've heard some other crazy numbers, but I think 30, 40% is the reliable number right now. What's being paid out to borrow from physical silver for these lease rates. So, and it's basically banks borrowing from each other from their silver to for contracts, for shorts, and to be involved in these different silver products that exist out there. But I don't see the situation changing because a lot of the silver right now is coming from the COMEX vaults that's going over to London, to the LBMA vaults. And so there is a deficit. There's a problem somewhere. And the problem is that the demand is substantial. You have silver right now trading around $51, $52 an ounce, gold trading upwards of above $4,200 an ounce. But with the silver, I expect this to continue because the system is broken, and silver future contracts are trading about $2 right now below spot, sometimes even as high as $3. What I like to look at where is physical at in the morning and kind of set that as a target of where, or spot price, set that as a target of where the futures should move towards throughout the day session. It's been working pretty well, and I see that continuing because right now, spot is people want silver now. They need it right now. They got to have their hands on it, whether it be to feel good or for industrial use. And because they need it now, the spot's higher. Paper's lagging. Usually that's not the case. The futures contract. December futures, like I said, $2, sometimes $3 wide. It's been a good indicator to watch when you're trading in these markets. And I think spot will continue to rise here. We'll probably see a touch around 55 here is my guess by this time next week. And from 55, I mean, exponentially higher right now. I mean, this is not a trade right now that's going to fix itself in the short term. So, I mean, overnight, you got to look at, we had about $1.20 on upside in silver. Gold was up, I think it was another $70 in the overnight. Came back a bit in the morning, but as of this video, it's starting to head up higher. And something interesting that I saw last night with gold and silver that I read about this morning here is on the ETF holdings. And I'm just going to read this to you. Overnight, gold ETF holdings exploded to the highest level since November 2020, with silver ETF holdings reaching the highest levels since June 2022. In fact, silver ETF holdings jumped by a startling 1.1% in a single day, with 9.2 million ounces inflow. That alone is, I think, why you will see silver propel itself and go upwards to 55. Tremendous demand right now coming out of the ETFs. A lot of investors do buy physical. A lot of, some investors do ETFs. The smart ones do trade on the COMEX contracts. Manage risk, though, of course. But just this demand alone on ETFs should push it up north of 55, in my opinion here. You also see different videos from around the world right now. I've been seeing a lot coming out of India, of lines, queues to get into silver. So the retail investor, the person that would just goes out and wants to buy some silver to hold on to, they're awake. And this rally has legs. Why does it have legs? I think, and you constantly hear about, well, the paper market, which is the futures market, is being manipulated. And they're going to slam it one day, like they did in the last 2-3 big rallies, where it goes up, it touches these high levels and then falls down quickly. This point, I think, is different. I think we are at a spot right now that if the market the futures market does get hit hard. You're seeing it being bought up very quickly. But if it does sell off and it sells off too fast, too hard, what would prevent sovereigns, large wealth funds, central banks, to step in and demand delivery from the COMEX? If it goes down to say 45, I think people with deep pockets will be buying hand over fist and assuming delivery from COMEX. What would prevent a shortage on the COMEX, like what you're seeing in LBMA? I would not. It's scary to think that there are shorts out there, but it's a market, and there always will be someone on the other side of a trade. Saying that, I think silver, the least path of resistance right now, is 100%, to the upside here. Manage risk, of course, if you're going into these contracts, but I just see such growth. And I don't think this trade is a shorter term trade like we've seen with other metal rallies where the rug gets pulled out from underneath it and it sells off hard and fast. I see this silver gold play playing out over 2 years, possibly, with silver ultimately getting up over $100 an ounce. I can't believe I'm even saying that, but that's the reality right now that we're in here. There's a demand for silver. There's a demand for gold. People are flocking out of U.S. treasuries and U.S.-backed assets, and they're looking for the alternative. Really, one of the only alternatives, and historically it's the only alternative, is gold and silver. Another thing going on right now, too, is there's whispers of central banks are looking at silver to start buying silver for their holdings. We know they're buying gold. They've been buying gold. That's what's got us to 4,200. I think it was about a month ago. It was Saudi Arabia. Their central bank did buy in under the silver ETF, the SLV, and that was confirmed. But I've been hearing lately that there's central banks, 3 or 4 other ones, that are looking at, and they may be buying right now. That's what's pushing it like it is. They may be buying right now physical silver. Time will tell. We'll see how that plays out, what kind of announcements come out over the next week, 2 weeks, but that could be at hand. Central banks usually wouldn't go into silver. They'll stick with gold, but given how attractive silver is at the current, price, how could they not? And the gold silver ratio is so out of whack right now, being at historically high levels. Silver, if it's going to be bullish for the next year or 2 years, it should trade up higher, and you should see that spread narrow from about 88 to 1 back down to, I think, at the very least 50 to 1. I don't have the numbers in front of me, but to go up to around 50 to 1, I think last I heard would put up silver like around $80 an ounce if gold continues up and silver continues up. So the pace is accelerating in silver. It is playing catch up. People right now are looking to buy gold. They see it at 4,200 an ounce. So they're looking at an alternative. They're looking at silver and platinum as well. Don't forget about platinum. Platinum right now is trading close to 1,700 an ounce. And that looks like it's got more room to grow. I think to 2,000 possibly by year's end. So, it's an interesting time right now to be in the metals markets and to be watching what's going on. I look at what's going on right now as historic. And it's not your run-of-the-mill silver, gold run up and then sells off and is flat sideways to lower for 5-10 years. I think this one has legs. It's going to be around for a while. And you can go out, you can buy physicals, you can buy ETFs, or you can buy futures. With futures, that's what we do. Futures contracts, you do get leverage. With leverage, there's risk. With risk, it needs to be managed. Something I can help people with. I talk to people daily about how to manage risk. And there's different avenues you can use. Aside from just buying a futures contract, you can buy options. I talk about that all the time with people. Options are expensive right now because there is a lot of volatility. But you can buy options and you can sell an option at the same time, a bull call spread. There's a lot of different avenues you can go with this. And I work with people daily on how to take advantage of this. So, if you got a question, if you wanted to go over opportunities, how you can capitalize on the precious metal space using futures, don't hesitate to reach out. Always available and always like talking to new people and talking about silver, gold, and what we're seeing here. I mentioned really quick about copper in the beginning of my video. And I've been telling people lately, don't sleep on copper. Copper was starting to go up, and all this tariff, it's a tariff trade right now. You had a tariff announcement, I think it was back in July, where silver or copper was up around 517. And the news that came out between the tariffs, US and China, pushed it right back down to about 5, actually below 5. And right now we've been creeping back up. It's trying to get back up to that 517. I'm sorry, it was at 588 in July. Right now we were just at about 517. But on Friday, there was news of 100% tariffs on China. So naturally, that pushed it back down to 5. Opportunity I see here right now is I've been noticing over the weekend and up until today that the rhetoric has seemed to soften a bit from Friday's 100% tariffs to maybe we'll work something out type language. I don't have the exact language, where copper's starting to float up. The big thing about copper right now is it is in the middle. It is in the metal complex. It's an industrial metal. It's not something people buy as safety, but the demand for copper right now over the next 10 years is exponential, 24% higher than where it is today is what I've been reading. And it's based off, a lot of it is with the data centers, what's coming with AI. Around 5 right here, I think in the softening rhetoric, there is an opportunity in copper. You can look to copper options. Copper is a big contract. If it's too much risk, you can look to the options. Or the CME even has a micro contract that is nice for people that don't want to, put too much into it. But you can put in 1-2 contracts. If it trades lower, you can cost average in and buy a couple more to bring your basis down a little bit. And ultimately a longer term play here. The tariff situation, it'll work. It'll play itself out. We'll see here over the next couple months what happens with US China, but don't sleep on copper right now. I think there's an opportunity popping up here. If it does get below 5, to buy copper and, smaller position, keep size smaller. And, let me know any questions. I'll be back next week to talk to you more about precious metals and the changes. Hopefully we're above 55 in silver. That'd be great. Take care.
The risk of loss in trading futures and/or options is substantial, and each investor and/or trader must consider whether this is a suitable investment. Past performance, whether actual or indicated by simulated historical tests of strategies, is not indicative of future results.